5, 4, 3, 2, 1, 0.
Ladies and gentlemen, I appreciate very much your generous invitation to be here tonight. You bear heavy responsibilities these days.
Welcome to Stock Legends Radio Show, seeking answers, opinions, and the inside scoop, putting you in the front seat on Wall Street.
In today's market,
This is breaking news. Where is it going next?
Ladies and gentlemen, welcome to Stock Legends Radio, episode 26. Please welcome today's host, myself, Quick Draw. Also, today we have a special guest here with us that we're very excited about. He represents the Acorn Corp.com. He's the CEO. He's been trading in the markets for a very long time and has an opportunity for traders to be able to further their education. Right now, with markets as volatile as they are, there's never been a more important time to seek additional education. You all know there's ways to make money in an up market and a down market. Also, be sure to tune in towards the end of the radio show. The Acorn Wealth Group is going to put a special offer on the table that is exclusive to the Stock Legends listeners on this radio show today. It's really an amazing offer with a huge value. So make sure you stay tuned to the end of the show. You won't be sorry. With that being said, it's my pleasure today to welcome Johnny Ayus to the Stock Legends radio show from Acorn Wealth Corporation. Johnny, welcome to the Stock Legends radio show.
Yeah, thanks so much, man. It's good to be here.
Oh, the pleasure's all ours. Now, Johnny, I'm very familiar with you in your trading methodologies and how you utilize the market to capture profits on a daily basis. But for the listeners that may not be familiar with you today, why don't you take a brief moment and tell us a little bit about yourself and your past and what brought you into pursuing a lifelong journey investing in the markets?
Sure. Well, it's a very exciting, venture or journey, I should say. At a very young age, my father was very much involved in geological studies. He was involved in a lot of different mining companies, from being a geologist right up to executive level. And I remember growing up, I would often ask him, as kids do, well, Dad, how much money have you got in? How much are you worth today? And depending on how the mine was doing month to month, those figures could change from low numbers to dramatically high numbers, and they would fluctuate. And I could never understand why people wouldn't get out at the top. Why, if they were worth so much, their stock was worth so much money, they wouldn't sell. It became apparent to me that if you could figure out some sort of technique on predicting some of these bottoms and getting out at some of these tops, there was a lot of money to be made. And that's what started me off at the age of about 15, 16. I started actually studying charts on stocks, and was fortunate enough to have a few mentors of my own that taught me some of the strategies that they were using, and took it from there.
You have the Acorn Wealth Corporation, acornwealthcorp.com. You've got an amazing group put together. You have a handful of extremely knowledgeable coaches that basically bring all levels of traders in, from a beginner level all the way to an advanced level, and teach them how to capture these profits. So on your way up to the top, I'm sure, just like in every other venture and every other story, there has to be moments where you win and where you lose. Did you have any of these kind of situations play out on your way to getting to where you are right now with Acorn Wealth? Did you have any hills and valleys that you had to conquer? And if so, tell us about them.
Absolutely. And it's when you're going through this educational process yourself, I mean, the biggest problem that I think any trader or a to-be trader struggles with is being able to filter through all of the noise in the system, if I can call it that. There's so many distractions out there, from different educational sites to different strategies, guaranteed win strategies and things like that can distract you on your journey to find the right way that suits you in terms of learning to trade or type of trading style. So on my journey through to learning to trade, my biggest weakness, I think, was actually trying to control the excitement, the emotion. And remember when I first trading account, I actually borrowed $10,000 from my father, and I showed him all my successes that I had in the stock market, and I said, I'm ready to go. And I set up this $10,000 trading account, and very quickly it tripled in value. So I'd made about $20,000 $1,000 off 10 trades of leveraged options on the S&P 500. And I kept having this type of success. I was building the account very quickly. Almost all of the trades that I did seemed to turn to gold. And I think a lot of traders have this. You get this almost the feel, like the touch of God, the gold touch.
I've been there. Yeah, you feel like you're invisible to the market. But the thing is, it only takes one false move and one smack across the face, and it's a very hard lesson to learn, which is why I think what you're doing is so admirable, because the majority of traders, they don't seek the education when they come into the market. The average trader has 5 to 10 grand. They get into the market. They may get lucky once or twice, but they lose their money. And a lot of times that one loss will keep them away from the markets for the rest of their life. But there's such a golden opportunity here that if you can learn from somebody else's trials and tribulations, a significant door opens to potential profits, and it could actually change your life. Did you have any of those situations where it was just the moment where you're like, bam, oh my God, I wish I would have just sucked more education, when you had that bulletproof feeling?
Absolutely. And that's the thing, is that a lot of people avoid the education because they want to just kind of have that quick path to success. But unfortunately, if you don't have that strategy to put the consistency in place, you'll pay very expensive education by way of losses in the market or missed opportunities. And one of those examples for me was, I remember there was a stock that I purchased. A friend of mine had called me up and he said, hey, here's this great stock that I think is really going to go. And I had a look at the chart with him, and it did look like it was about to make an explosive move to the upside. And we both jumped in and bought the stock, and sure enough, 2 days later it had gone from 30 cents up to about $1, just over $1. I remember getting on the phone with him and I said, James, we've got to get out of this. I think this is the peak. Everything I'm looking at on the chart looks like it's topped out. And we read the charts together, and sure enough, that looked like exactly where it should turn around based on some of the technical rules that I'd studied. And so then, we got off the phone and I put my sell order in to sell it the next morning at $1. And at the time, I was actually staying at my girlfriend's house, my better half. And I had my laptop set up in the corner on a chair. I remember it was about 2 o'clock in the morning, and I'd woken up for some reason in a bit of a panic, thinking about this stock, because we had a pretty substantial investment in it, and we were already up many thousands of dollars in a very short period of time. I woke up, looked at the screen, saw it kind of humming at me, and I thought, well, gee, if it goes to $2, I could buy a car with the extra profits I could make just in an extra day or two. And I was already spending the extra money in my mind. And so, I walked over and climbed out of bed, and I went over and took the sell order off and went back to bed. And sure enough, what I've done is given into the greed factor. We've all done it.
That's why I'm laughing, because, there's so many traders tuning into this right now that are just like, wow. I sat and played that same exact violin, and it's amazing because the emotion grabs such hold of you. It actually burns you, which, you jumped out of bed. You woke up from a sleep, probably sweating, and you're like, I've just got a feeling that this is the winner. And you fell into the trap. So what'd you do next?
Well, the next morning the market opened, and I was sitting there watching it, and then, of course, this is the emotional trap you play into, because then it started pulling back and started dropping, and now from $1 it was down to 80 cents. And of course I thought, well, now it's down to 80 cents, it's sure to bounce from here, and then down to 70 and 60 and 50. And sure enough, then you kind of get the ostrich effect, where you want to stick your head in the sand, and you go from being incredibly excited and can't wait for the market to open to dreading the next minute. And so when I finally got out, I still had a slight profit, but I'd certainly given back a very large portion of what we'd made there. And purely from, that giving into the emotions, and the strategy goes right out the window. Exactly.
It's similar to go to the casino and you hand them cash. You hand them cash and they give you chips in return. It kind of detaches that factor of whether or not it's real money. And we were actually talking about this, and you were saying how good of a point it is and how much it plays into your daily trading, where if every time a stock went down a tick mark, if somebody opened the door and went and pulled $500 out of your pocket and went out and closed the door, every couple of minutes, people would trade a lot differently. It's no secret, right or wrong.
Absolutely. And people have the mentality, I think, a lot of the time where they don't feel that those losses are real because they haven't sold yet. But that's the same as hoping that man who comes into your room and takes $500 out of your pocket is gonna have a change of heart and come back and give it back to you an hour later. It's not necessarily reality. And we encourage, for example, investors who are holding stocks that are down, who are wondering what should I do with this position? Should I keep on holding it or not? A good question to ask yourself is, for example, if I didn't own this stock right now, will I go out and buy it today for the exact same money that I have in it right now? And if you find yourself saying, no, I would never buy this stock right now if I had a choice, you've got to ask yourself the same question. Why are you still holding it?
And you know what? That's such a key point. And a lot of investors, I feel like in the market, feel like they constantly have to be in a trade. And this is one thing that I relate to because I battled with this for a long time, especially before I actually got to the point to where I had a day trading account, which is an account with a value over $25,000, where I felt like on a 5-day trading week, I had to actually physically be in a stock all 5 days. Now, coming from your position, I'm sure you see a lot of traders from all different walks of life. What's one of the biggest mistakes or handful of mistakes that you see beginner level traders making when they decide to come into the market?
Well, that's a great question, and I've worked with thousands of traders over the last 6-7 years, and it's always the same things usually. Take a look at how most people invest in the market. Most of the people invest in the market because they've had a tip from a friend saying, hey, listen, this is a great company XYZ I heard about. I'm already up 20%. You should buy in. Other people buy because their friends work for the company, or maybe their dad works for the company. Other people buy stocks because their brokers recommended it to them, or mutual fund, and we know how well that story usually plays out. And then, of course, you've got other people that buy stocks because they're familiar with it. I mean, look at Apple and RIM. How many people loaded up on RIM stocks because they enjoyed their BlackBerry versus people that loaded up at Apple around $300 because they had an iPhone? And based on that, whether you had an Apple or a BlackBerry would be a very substantial difference in your in your profitability of your account. So most people they buy into stories, and what we need to keep in mind is that these stories are being told to the investment market usually the only piece of information you need. You need to understand where price is going. So let's take for example that I've done all the research into all the stories, and I found out that I really believe this diamond mine on the New York Stock Exchange is going to be a great long-term investment. I think they're going to really do wonderful things. They're going to buy into the buy a new diamond mine and acquire lots more resources. So I go out there and I load up on a stock at, say, $5. Now, I might be 100% right. This company might be the next huge thing. But if the rest of the traders out there haven't been as diligent as me, and they don't realize this yet, and there's no buying happening, then the stock's not going to go anywhere but down. So you need to have both. If you need to know, maybe what the story might be, but you've got to understand how price moves. It's all about buying versus selling. So understanding how to read that is very important, and that's exactly what we teach people straight up, is how to detect when big amounts of money is moving in or out of a stock, because that's going to be the most important thing to show you where price goes.
So, for example, you want to wait until you see the first symptoms of something developing and taking place. In a unique kind of story, a couple of quick stories also that fit right into this. The first, I traded for about a year just listening to noise. And what I found is that I was able to capture some profits, but oftentimes more than not, I was jumping into stocks at the top based on the fact that tons of people were screaming about the stock and how great it was. And then the sell-off would start. And more times than not, I was able to get out with a profitable position. Sometimes I got out with scraped knuckles. We've all been in that position. But the one time I actually did the due diligence and made creative trade was a solar panel company that I researched. I spent a week digging on this company, and I bought the stock, and I got in with about $20,000, I think like $22,000, and I held it for 2 weeks. And I'd be darned if not even $500 traded for the 2 weeks. But I talked to the CEO, I'd called the company, I'd done my research, I was very confident in it. I held for another 2 weeks. Now I had the stock for a month. Still nothing's going on. I sold my shares. Not even 2 days later, the stock started to rally and didn't turn around and look back until it had gone 4,000 or 5,000%. And I questioned myself, and it was one of the biggest mistakes that I made because I was there for the right reasons. I had confidence. And that's one strategy. Is that going to be the most successful strategy? Probably not. Using your strategy, you're able to capture profits because you're not falling in love with one particular stock. You're seeing symptoms that you like and jumping in, capturing that profit and jumping out and starting your research on the next one, which is really, it's kind of like jumping into a giant room with $100 bills floating in the room. You run in, there might be $100 bills floating around, but hey, if you can get 6 or 7 of them before the door closes behind you, you're a winner, right?
Well, this is right. And look, I mean, if you look at where the trades are, 70% of the market trades are not based on stories, based on rules, because they're coming from these computers. It's important to know these rules. Yeah, and look at the stats. I mean, statistically speaking, only 10% of investors make money in the stock market. How do they make it? They make it by taking from the other 90%. So, would you like to join the 10%? Or would you like to keep doing things the way that all losing traders do, which is to trade emotionally and react based on greed and fear? And as you said earlier, most investors are actually buying high and hoping to sell higher. But, the way I always thought the best way to make money was to buy low and sell high. So how do you identify those lows? And these are answers that you must have. So again, look at the news. One of the big problems with buying into news is that anything positive about a stock that's reported to the public, even through so-called inside tips and so forth, they're always factored into the present stock price. So, once you hear that a stock is strong, it's usually already too high price to bother with. So while conventional wisdom says, stick to the fundamentals, why concentrate on perceived fundamentals when there are actually easily observable forces driving the market prices?
Exactly. And that would be more or less the technical analysis side of the market. How is that what you utilize to sit down with the newer traders and assist them in capturing the process, technical symptoms?
Absolutely. In fact, if you look at great examples such as NUGT is a stock actually that we had followed, and so one of the things that we're looking for in technicals is we're saying, okay, let's strip away the noise, let's ignore that, let's turn off the TV, let's throw away the newspaper, and in some cases we don't even know what the company does when we buy or sell it. Sometimes it's purely technical, so we strip all that noise away, and what we're interested in is when is the big money potentially going to come into something? Now, NUGT was a stock that tracks the gold miners. It's actually the gold miners ETF. What happened with NUGT is it had been coming down quite sharply, and it actually found a base. I think it was around $8.
Actually, I'm looking right here. Yeah, NUGT had it. It was about 10.25. You could see after a bloody 2 days. I mean, it dropped from 13.25 to just above $10. I mean, in 2 days. So a 30% drop is very significant for the market. It found its base after grabbing that support, which is where the 50 MA moved across back at the August.
That's exactly right. And so what we looked at is we looked at at the times in the past where big money had came into the stock, and we were able to identify what I mentioned earlier, that fingerprint. So when we saw that money coming in at a particular price, what we did is we waited for the next time it actually came down to that price. And I'll give you the date. See if I can bring it up here.
Actually, that's very unique that you said that, because earlier when you said, each particular stock requires a different set of tools, and unique that you said that and just kind of related the same type of comment to this, how you first saw the fingerprint, you didn't jump on it, you waited and identified it, and then you looked for the second time. And I say this to traders very often when I do technical analysis on charts. For example, I'll go down and I'll take a look at a MACD or WM indicator or something else, and I'll see, hey, here it closed, here it crossed positive, here it crossed negative, and I'll draw a vertical line and be able to associate on the chart where that took place. And you'll say, hey, you know what? I see a pattern here. This, every single time this crossed, went up 200 to 250% and then came back down and went red. So every stock might have like an indicator or a set of tools that once identified, you can take advantage of multiple times. There was one stock that I found the DNA on, and I traded, I don't know, maybe 6 or 7, 8 times in a single month. And I made so much money that it was like going to the ATM. I mean, I couldn't help but to laugh every time I saw it. It was just amazing. Now, you keep going back and mentioning these rules, which I think is such an important factor. It's almost like the term rules is ingrained in your head as a negative thing. When you grow up, you don't want to listen to the rules. You want to go against the rules. But the stock market is the one place where these rules are your best friend. They can protect your investment, or they can breed growth. They can help you capitalize on profits. You've said rules a few times. What kind of rules have you put into place that you're teaching the new traders, and what kind of outcome are these rules designed to enforce?
Yeah, absolutely. The rules are very important. And when we go through, when we ever take a trade, we have a list of rules, like a pilot's checklist that we actually teach our students to follow, and we use ourselves every single day. And the reason why rules are so effective is if you don't have rules, you're subject to emotion. By taking the emotion out of the equation and replacing it with strategy and rules, it makes trading a hell of a lot more fun, because you can buy a stock and you'll know exactly why you're buying it. You'll know exactly where you're getting out, or where you hope to get out and take profit, and exactly how much risk you're willing to take to make it. So this is why rules are so important, because they mean you can trade concisely and accurately instead of stressfully. So the list of rules we go through is when you start to sit down in front of your computer at night, let's say, and you're looking for a trade the next day, the first thing is to say, okay, is the market, what direction is the market going in? Up, down, or sideways? Because you can make money in all three directions, by the way, up, down, and sideways. So if you're only making money in one direction, you're only making money 30% of the time. So once we've determined that, we can say, okay, if the market's going up, now we're going to go to our trading software, and there's actually scans that we've developed that will go through and analyze every single stock on the market, looking for the characteristics that we're looking for. And so we'll run that scan, and it will come back with, say, a short list of about 10 stocks, maybe 5 to 10 stocks that are that look like the criteria or the pattern that we're searching for. So once we've found that the stock market is moving in the direction, and then we'll look for a stock that's following a pattern that looks like it's going to go up in that direction. And then what we do is we start then looking for other things to confirm it in the indicators. Now, an example of that would be volume. So if I'm looking for a stock that is about to shoot up, and let's say it's been going down over the last 3 days. It's going down from 8 and then down to 750 and then down to 7. But at the same time, the volume is dropping. So let's say 100,000 shares sold at 8. Then the next day, only 50,000 sold at 750. And then the next day, only 20,000 sold at 7. That would mean that the stock price is dropping, but less and less people selling. And this is called divergence.
Right, or drying up. Yeah, the selling's drying up, you'll hear traders say. Exactly. And so as that happens and the price reaches a support point, like we're talking about on NUGT, a price where it's likely to bounce, and you see the volume or the selling also drying up, then that would be a confirmation. And then the other thing to look for is to look for overextension or extreme values in the indicators. And you'll hear the terms overbought and oversold thrown around in the market quite a lot. And that's basically what we're looking for. When we buy a stock, as I said earlier, we're looking to pinpoint that exact price area where it's highly probable it's going to turn around and shoot straight back up. Now, one of the things we can look for to help with this is we can look for evidence that the stock has really just been stretched so far that it's likely to snap back. Think of it like an elastic band that you're just stretching out further and further and further until there comes a point that it's just going to snap. So in a trade,
in a stock, you can actually look for these types of things through indicators such as Bollinger Bands. Now, Bollinger Bands are basically like, think of a stock chart. Bollinger Bands are like a river that follow it along. And you got the upper band, so one side of the river, and then the lower band, which is the other side of the river. And the stock will swim back and forth between those two areas, those two lines. Now, statistically speaking, about 94 to 95% of all of the movement that a stock does is going to be inside those Bollingers. So guess what? If the stock is outside that Bollinger, there's a 94% chance it's going to go back in. Again, think of it, I'm in the office far too much. I pulled a 16-hour day the other day, and a friend of mine came down to the office. He's actually a student as well. He's just finished his course, and it was actually only last week, and he'd wanted to have a glass of wine to celebrate his first profitable trade, and he made, I think it was about
good for him.
Yeah, well, so he popped by and I was there. He said, "I knew I'd find you here," and he said, "In fact, John, if I was to ever get here and you were gone, I'd just wait for you." And it was a funny analogy because it's just like these Bollinger Bands. You know, if 94% of the time a stock spends its time inside them, well, if it goes outside them, there's again that very likely chance it's going to come back in. So adding all these things up, you start to get higher and higher and greater probability of your trade doing what you want. Because it'll be, for example, markets are going up. It's reached a price point that it's likely to snap back up from. It's also outside the Bollinger at the same time. And then there's a series of about 4 or 5 other things that we also look for. And when all of these rules match up at exactly the right point, at exactly the right time, or same time, we call this a perfect storm. And this is the key, and this is what any successful trader would tell you, is that by having a strict discipline of making sure everything is all lined up, this gives you a very high probability of success.
And that makes a ton of sense. Now, we don't want Johnny's award-winning spaghetti sauce recipe, but there's no chart scan that says, yeah, this stock tomorrow is going to make you money, right? I mean, we've all been there. You know, we're pulling stock scans and we're saying, yeah, this looks good based on this scan or based on that scan, but it's not just the tomatoes that makes the award-winning spaghetti sauce. It's the mixture of ingredients. So you more or less have a hit list that you train your guys to go through that are like, okay, check these off the list, and if everything's good, go big money in once you get confirmation. Is that more or less? And how much does that strategy and hit list change, let's say, on a bearish position rather than a bullish?
Well, you're absolutely right with the term ingredients. As you said earlier, you have to specialize. So what we've done is we've said, okay, we're going to specialize in trading the extremes. We're going to look for a highly probable point where a stock is going to reverse. So what are the ingredients that go in to make that trade? And we've been able to, because there's hundreds of indicators and literally millions of combinations, you can put them all together. So it's important to get that recipe right. Again, I use the example when I'm in our classes. You know, it's just because a steak tastes good for dinner doesn't mean it's going to taste good mixed into a pavlova. You know, so you've got to make sure you're using the right recipe for the right trade, and what works well on one trade may not work at all on a different type of stock. So you've got to have that right. And that's what we've done is we've put these ingredients together, and we've said, okay, we want to make sure that X, Y, Z are all lined up to give us the best possible outcome of profit. And the scan will actually go through and look for all those things in combination of one another, and then actually give you that short list of stocks. Once we've got that short list, again, it's about looking at some of those visual things, making sure that the pattern is what we're looking for, and just a couple of other checklists that we'll cross off. And the final thing, which is actually the most important thing, is then managing the risk. So if we see that the stock is everything we want. It's definitely something we're wanting to buy. The final checkpoint is actually protection of your capital. Because while you might think the number one goal is to make money, actually the number one goal is to not lose money. The secondary goal is to make money. So when we buy something, we'll, on average, let's say we put in about maybe a 1 or 2% risk. So if we're buying it at 10 and it drops to 980, then we're out immediately because it's the trade we thought that was happening didn't happen. It went below the buy. So we'll take maybe a 2% risk. And then what we'll do is we'll set the area that we want to sell at even before we've bought the stock. So we'll say, okay, tomorrow we want to buy it at 10. We'll put our stop loss in at 980, and as soon as it's gotten to say $11, we're out. So by doing that, we've taken the emotion out of the equation, because no longer are we looking at it tomorrow when it hits 11 and saying, oh, gee, should I get out? Should I stay in? You remove that stress and you replace it with strategy, so that there's basically like a business plan in place where you're managing that setup. This is very important because this also means that if you do this on every single trade, if you use this discipline, then one trade that wins, where you might make $1, pays for 5 of your losers, where you might have only lost 10 or 20 cents. So with proper risk management, you might only get it right. You might be a terrible stock picker. Let's say you go through this entire course and you're just the worst student out there and you only get it right 45% of the time. If you put your risk management in place, you still can make money. The beauty then is if you're actually a half-decent stock trader and get it right 60 or 70% of the time, you can make a lot of money. So that's why that's really important.
And, we see the investors every day. What's important for the investors to know is this is the one place on the world that God leaves alone. He is not involved with the stock market. You can pray to him, cross your fingers, do your glory dance, whatever you have to do, your rain dance. It's not going to help. You could do 1,000 perfect trades, and that one unorganized trade where you don't follow the rules can wipe out 1,000 good trades in a second. I mean, I know because I spent, 4 or 5 months following my rules, my own personal rules, and they weren't nearly as well put together as yours. They were just my own kind of run-of-the-mill rules that I had for myself. And, it did a great profit, drop by drop, canceled out the noise. And I got hook, line, and sinked in one stock that I believed the story in, and I watched it sink like the Titanic. And we're talking, $60,000, $65,000 investment, and I got out with about 10-2. And that's a tough lesson to learn. That's very tough lesson.
Yeah, you're right. And I think that most people that I've talked to over the years, they're not wanting just enough money to go buy a holiday over Christmas. They're wanting to learn to trade stocks because they want consistent money. And if you learn to trade properly, it can be a way to make a great income from, as I said earlier, anywhere in the world. As long as you've got a computer and a cell phone, you can make money from anywhere in the world for the rest of your life if you do it properly. And that kind of consistency is what's important. And that comes from having consistent rules. So, one of the trades I looked for, one of the trades we did a few weeks ago was on Carnival Cruises, for example. It had been rallying right up all the way through August. And the symbol for those who want to follow along, by the way, is a CCL for Carnival Cruises. And it rallied up from $32 all the way up to a high of $39 on September 25th. And as soon as it reached that price, it actually opened at that price and then just went straight down. And it's almost like it had hit a magic invisible ceiling. As soon as it hit that price, it plummeted from 39 all the way down to a low of about 35.91 a few days later. So immediately I'm looking at this and I'm thinking, well, for a stock to be able to just dramatically change direction like that, again, there must be that kind of automatic selling programmed at that price. So as soon as the stock had rallied again, and it hit that $39 price on October 18th, I bought put contracts on this thing as a way to bet against the price of the stock. And as soon as it had dropped about 2 or 3% over the following 2 days, I sold those put contracts, and we were able to make it was about a 30% approximately return in just 3 days. And so that's an example of one of the trades recently. Another one that came up on our scan was Juniper Networks, JNPR. This was another stock that again had reached a point of potentially a good short point. And this was the kind of stock where it had been coming down from $20 down to $16.50, and then had this sharp rally up to the let's have a look here. It was around the $18.50 price point, and then went straight back down to $16. So again, this was also something that as soon as it rallied back up to that $18.50 price point, we were also looking at that as something that had met all of our criteria of being a highly probable move to the downside.
Exactly. Well, especially laid out right now. We're on $18, and if you pull up a chart here, a 6 month or whatever, you'll actually see that 200 MA is actually converging right at that $18.50 point. So that will probably act as a major resistance point naturally. You can see it touched a few times. So anyone looking for a profitable short, may want to take a look at that JNPR over the next day or two. It's a good time.
Well, and exactly. The same thing. If you, if you look up Crocs, CROX, we released a news report. I think you'll find it on both Google Finance and Yahoo Finance. We were published there about our report on Crocs and Crocs. We said hey, if you look at these, back on the October 25th, the price had hit 14 and just dropped straight down to 12, almost in 2 days. So again, as soon as it came up and hit 14 again, we looked at the volume, and Tuesday there was 6.83 million shares. Wednesday there was 2.26 million shares, and then on Thursday of last week, 1.84 million shares. So volume was halving every single day as it moved up, which, as we talked about earlier, is divergence. So this was, to us, this seemed like a no-brainer, where we were able to, you could have shorted that at $14. You could have had a stop loss at $14.10 and a profit target, kind of around where it is at the moment, say around $13.35. So there you go. You're making, 65, 70 cents, and you're only risking 10 cents. And that's the beauty. That's the beauty about trading, is when you are armed with the right tools and you know exactly what you're looking for, you can trade successfully with high levels of confidence. You can pick the stock, you know exactly why you did, you know the objective, the parameters, you sell when the objective is met, you set your stops. So, if the stock falls below where you thought it would bounce, you're out. If it keeps rising, your stops automatically follow it up, so that if the stock turns around, your profits are protected. And using these swing trading profiles, which is the profiles we teach you, you'll actually see that with structure, you can predict the behavior of stocks with amazing accuracy. And if the stock doesn't take off within 2 or 3 days, you discard it and move on. And that's the beauty of this, is that you can really harness the power of these strategies and get out well before when Main Street starts trading.
For a trader that's listening today, what would your recommendation be? I have a good friend of mine, and he's traded for a long time. Unfortunately, for him at least, the market's one of those beasts that kind of changes on a daily basis. The markets are always changing, but with the changing market are also strategies. For example, a lot of this algorithmic trading that you're talking about that controls a lot of these volumes, algorithmic changes in the market make it so that you have to have a different strategy formalized than you might have had to have, 8 or 9 years ago. For example, the .com boom, the tech boom, all these booms. You could have thrown darts at a wall and made money, and a lot of people did. But in a market like this, you actually have to have a formalized strategy, and that strategy has to change quickly and accurately with the market and the other factors moving the market. It could be economic factors. It could be all kinds of different factors. What do you think the minimum amount of time needed to further education on a weekly basis is? And I say this because I have a very good friend of mine. He's been trading for 10 or 15 years. He's always made a lot of money, trading 7 figures at one point. Now he's almost broke. And I'm telling him, listen, you got to go back to the drawing board and sharpen up your education. But he's one of those traders that just thinks he's just got it down. No matter how much money he loses of his wealth that he used to have, he just swears that he has the recipe, just something's not working right. And rather than going back to the drawing board and reformulating that strategy, which is where the further education comes into play. How important is furthering your education at all levels of trading? And with that being said, I mean, what's the minimum amount of education that people should look? I mean, education's fun. What's the minimum amount that they should look for in order to keep a nice, fresh set of rules, keep that market up to speed in their minds?
Well, and the other thing before I answer that is that education is also crucial. Just think about it. How much time in your life do you spend working for your money? How much time? Years and years and years working for your money versus how much time has your money worked for you? It's completely disproportionate. So think about how much money and time you spent on education just to get a job, or as we call it, just over broke.
Right.
So
an average person, exactly.
Absolutely, and like I just talked to someone the other day, and they just gone through a real estate course. They put $10,000 on their credit card to get all the textbooks, a bit of tutoring. And for what? To get a job. In other cases, that's tens of thousands to go through college and university to get a job, to be hundreds of thousands in debt. So why on earth wouldn't we invest the time and money to educate ourselves on how to properly manage our money and have it work for us? Because that is the long-term success, and any successful entrepreneur in any kind of area will tell you that, if an educated financial look at a dollar is, you don't see a dollar. Every dollar I look at, I see 100. A dollar into 10 and then 10 into 100, 100 into 1,000, and on from that. And I was taught that by my mentor, and he was one of the wealthiest men in Australia. He made, some years he was making 10 to 20 million a year in dividends from his investments alone in different companies. And I was shoe shopping with him, and he looked at this pair of alligator leather shoes, and it was $300 and something, and to him that's nothing, And he said to me, these are the ones I want, but they're $100 cheaper down the road at the Pacific Center, it was, or something like that. And I said, well, why do you care? It's $100. He said, because the reason I have the money I do is because every $100 I grew into 1,000. So I'm not going to pay $1,000 more for these shoes.
That makes sense.
And so, this is the thing about education, not to rattle on about it, but, education is the difference, is the key difference in long-term success. And if you look at the traders out there that make millions and millions and millions a year, one of my new clients is one of the most successful orthodontists in North America. He said to me, his neighbor, owns mines in all countries around. He's got gold mines, diamond mines. He's worth $1 gazillion, to quote my client, what he said, one of our students, what he said. But he said that apparently all the money he was made was in the stock market. He's up at 5 o'clock in the morning, checks his little rules off, and he does his checklist, trades from 6:30 till 7:30, and he makes more money in that than in anything else that he does. That's my point about education. It's just do yourself a favor and invest in yourself and learn how to get these things in place, and the future is very bright. With that being said, what type of time is invested? Well, for example, the style of trading that I love, I'm a bit of a swing trader. So for me, I don't care about making the most amount of money. I want to make a lot of money, but I don't want to have to be in front of the computer during the day. So, for example, I'll do my most of my work at night. 30 minutes, I'll scan the market. I'll do my scan up, down, or sideways. I'll pick out my short list of 3 or 4 stocks. I'll decide where I want to buy or sell them and where I'm going to set my stop loss. I'll program that usually all ahead of time at night before I go to bed, and then I'll let it go. So the next morning, I can be out on the golf course, watching a movie, or watching the market. But I do whatever I want to do, and then my money is managed for me by my strategy. So with that, you're looking at maybe, say, half an hour a night of work. In terms of ongoing education, what we then do, and all of our students will have access to this, we actually do what we call a trading room every Tuesday and Thursday afternoon, which goes from 5 p.m. Pacific to 6 p.m. Pacific. And that's where we do our ongoing education. That's where what we'll do is we'll review all the markets, we'll review all the trades we're doing, and we'll see, are all the trades making the types of returns that we would expect them to. If they're not, we'll stop trading, go back to paper trading, and try and figure out why. Is it because of the market? Is it because of is it just because of a weird week? But if we ever see consistency stop, we will stop trading. So, and in these sessions, what we'll do is we'll look at the overall markets and we'll see how different overseas exchanges are doing, how gold's doing, and we'll start to correlate how a performance of the trades are doing in relation to everything else going on in the world. But that type of thing is very helpful. But the most important thing to do is the most effective thing to do is to keep track of your own trades. So you don't need to go out there and review all these different strategies, because that can actually be detrimental. You can overlearn. And the key thing to do is to get really good at trading the one or two strategy that you decide to specialize in, and then keep good notes on those trades. So when you buy something, why did you buy it? What was the risk and reward? What were the concerns that you might have had? How did you feel at the time? And if you keep track of those, if you ever fall into a slump and you had 3 or 4 trades go against you, you can look back at those that checklist and say, oh, well, why did I take that in the first place? And you might be able to then see that in each of those losing trades, maybe you were a little bit greedy and the indicator wasn't quite right, and there wasn't any divergence. And if you can then detect those kind of patterns. So that's the most valuable form of research, I think, is researching your own habits and make sure that you're following your trade checklist.
That makes a lot of sense, kind of like everybody that's gone into the fridge and wished that there was something in there that wasn't. You still go and open the fridge 5 or 6 times, trying to make it appear. It's almost kind of a naive type of comparison, but in the market, it's the same thing. I mean, you can't make an indicator there that's really not there. And the only person that you're fooling is yourself, because unlike everything else in the world where everybody's watching your every move, in the market, it's just you in the market, and it will release every weakness that you have, whether it's fear, greed, anything. That's going to be the demon that you're going to have to fight until you become successful. Kind of channelizing your strategy through your system, you're able to, number 1, formalize your strategy, number 2, confront your weaknesses, and number 3, start to profit. I really like your approach where you said 30 or 40 minutes a night. That's how much time it should take.
And to quote Timothy Ferriss, Timothy Ferriss, The 4-Hour Workweek, great book. If anyone hasn't read it, it talks about the fact that in 1 hour a day, he's able to make as much money as he used to make working 60 hours a day by being more efficient. And that, by the way, trading is a great way to do that, to have a 4-hour work week. And one of the things he talks about is the minimum effective dose. I often find that the stocks that I find in the first 10 minutes of my research are the ones I trade. Even if I do go on for hours looking for 200s more, I still come back to the ones that I found at the very beginning, because those are the ones my scan found, and those are the ones that are already set up.
Exactly, yeah. You go and try on a shirt, you look in the mirror, yeah, it looks great. Well, you go try on 15 or 20 more, you end up going back to the same one anyways, or you end up convincing yourself that one of the worst ones is better. It's amazing, and really the psychology of trading is purely amazing, because all it is just really figuring out the human brain. Because guess what? You do the same thing as I do. You throw on a shirt, you look at 10 other ones, you do the same thing. Every person in the world does. Same with the females. They go look in the mirror 10, 20 times at their hair. Why? Because we're all humans and we have a lot of the same characteristics. So identifying those and exposing them, bam, now you're done. You're in the green, you're in and out quick, and you're trimming through the fat. Now your strategy uses like a building block format. Any other more or less like structures that you put into place to help them control the profits and loss? Do you use trailing stops, and like what are your favorite indicators? Is there a fountain of wealth that you go back to with particular indicators? More importantly, though, the profits and loss and the trailing stops, do you use those, and how do they play into your methodology?
Now, we're not here to try and predict the future. What we're here to do is we'll stick with a trade as long as it's still staying by the rules. So as long as the rules are still working, there's no need to do anything. With Apple, it looks like it's got a if one were to play the options, the type of way that we would approach it. And I'm not recommending that this is what people should do, and we're not here to recommend buys and sells on stocks to people. You got to make that decision yourself. But if I were to trade an option on that, obviously 510 looks definitely like where the support would be. I'm the kind of person that would kind of go the halfway mark. So I would say look at that 560 area. and which would be a $25 drop or 5%. If I was to buy a short-term put on that, that could be as much as a 50% return in a day or two, if it were to drop like that.
Yep, and so I see the two candlesticks that you're calling out there, which would be the looks like the November 20th and 21st stick there. Now, let's say, for example, that it gets there. Could a trader readjust your set of rules to make that day the present day? So let's say it gets to, that 555, 560 mark. Can he clean the slate and say, okay, now from this point, I'm going to add my stop at 3%, and then I'm going to aim for another. Can he readjust his rules to that original criteria and then move forward from that day forward and still play within the lines of reason for your set of trading parameters?
Yeah, he or she could, absolutely. Here's how I think about the stocks, though. See, this is another key mistake of investors. Most investors think that they need to make all their money on one stock for whatever reason, usually because they're attached to it, they've fallen in love with the story, you name it. Now, this is inherently problematic because I'd like to draw something to people's attention. How many stocks do you think in the market go up or down 10%? How many go up or down 20? How many go up or down 30, 40, 50, 60, and so on? The more percentage movement you ask for, the lower the probability it'll get. So let's say that there is based on this strategy, let's just hypothetically say that there is an 80% probability that when all of the things match up, it'll go up 10%. And then it hits a resistance level, and it'll either go through it or it'll come back down. So let's say that we hold, because we 10% isn't enough. We want more. So we hold, and it goes through the resistance and it gets up to 20. And let's say, but at this point, to make a 20% profit, we are now at, say, 50% probability that it'll get there. And let's say we want to keep holding because we want to make more. And now we need to break through another level of resistance. And then to get to the next 10% profit, or a total of 30%, maybe now the probability is 20%. So most people will find that they're consistently maybe wiping out profits because they get too greedy. And the reason why this isn't necessary is because let's say it takes 3 weeks for every 10%. Or 2 weeks, let's say, for every 10%. So in the end, it did go up all three levels. You made 30%, and it took 6 weeks. Well, the way I would look at it is I would rather get in and out and make that 10% in that first 2 weeks, then find a stock that looks exactly the same, that's about to do it again, and ride that first 10% once more, and then find another stock and do exactly the same thing. So over that 6 weeks, I've still maybe made 30+%, but I've done it at 80% probability for each trade, rather than buying, holding one at a 20% probability over the same time frame.
That makes a lot of sense, because the longer you ride that wave, the more the wave starts to change. And when you're on it, it might not seem like it's actually changing, when really, theoretically, you're going against the original system and fingerprint that you looked for and created. Now, for the traders that are new to the market, obviously before they start juggling a bunch of different trades, what's the average amount of open trades that you would recommend when becoming familiar with a new trading system like this?
Well, everyone's going to be different, and I can't, we are not a financial advisor. Our job is not to kind of, to recommend stocks to people or anything like that. And, that's something that you need to decide on your own. We're most certainly here to give you all the tools and show you how we have done it and what we do, so that you can evaluate those opportunities and the options. It's the most important thing is to give yourself the knowledge and confidence to be able to make those decisions. That's what we're here to do. For myself, I find that if it's too complicated or if it's too much work, I'll put it off. If you're doing an hour or 2 hours a night of just stock scanning, it becomes too much like work. You want to keep it enjoyable, keep it efficient. So I generally like to have maybe 3 or 4 stocks at any one time that I'm going to be trading. And if that might be getting in and out every within a week, for stocks that, if I added stocks that maybe I want to have a bit more of a longer term investment where I'm holding for a couple of months, maybe another 3 or 4 on top of that. So For active trading, I generally don't like to have more than 3 or 4. For more short to medium term swing trades, I might have maybe 8 to 10 at the very most.
That's a decent amount to juggle. So you're building up to that. But, if you set the rules, it's really not work, because remind the investors, you're setting your entries and exits ahead of time. So and you've got your stops there. So on stocks like the ones that you're targeting, they're liquid to the point to where if something goes wrong, you're going to get tapped out automatically, hopefully in a green position, and you walk away with a profit and quickly move to the next stock.
This is right, exactly. I mean, the only reason I would ever have more than 3 or 4 stocks, and sometimes I might only have 1 or 2, which has been quite common recently. I've just been going big into stocks that I felt were highly probable and just getting in and out very quickly for nice big chunks of profit. The only time I would have more than a couple of stocks is if there are things I've set up and I've said, hey, listen, get in at this price, get out at that price, and I don't even, between when I buy and when I sell, I don't do anything other than look at it simply out of interest to see where it's at. That reminds me of a great story. I went down to Los Angeles, into Hollywood with my girlfriend at the time, a few years ago. Still my current girlfriend, actually. We went down for a brief holiday, and we were staying in one of the nice hotels there on the Sunset Strip, and I remember waking up in the morning, just out of habit. It was about 6:20. I woken up and I looked out the window. And it was this beautiful kind of sun just coming up, and the shades just slightly pulled back from the window, and coffee starting to boil. And I looked over at my laptop, which was in the corner on a stool like it was in the last story. And, I went and got a cup of coffee, and I got back into bed, and I sat there kind of admiring the scenery. And then I heard this ding come from my computer. And I walked over, because it's the sound it makes when a transaction goes through. And I went over, and it was a stock that I'd been holding for about 5 weeks. I'd almost forgotten that I had it, but we'd bought it at, I think it was something around like $9 or something. And it was this perfect, what we call a fallen angel setup, which is kind of like something that looks like a ski jump, this big, long swoop down and a little kicker at the end, and it usually pops, sometimes anywhere from 12 to 20%. So we bought it at 9, and we'd set this sell just under $11, and as I said, basically forgotten to look at it. I'm away. I'm on vacation. I'm not looking for any new trades. I just set my stops, set and forget, as they say, and then I was in the morning enjoying my coffee, and I just made several $1,000s without even having to do anything other than set that trade up initially. And I thought it was it's great. One of my most favorite moments actually as a stock trader. It wasn't the huge profits you can make on some trades. It was actually the satisfaction of seeing the entry and exit work perfectly. And what was even more satisfying, if I can go on with that, was actually to watch it drop straight back to where it came from after hitting $11 over the following couple of weeks, because that meant to me that not only had the strategy worked, but I'd managed my entries and exits perfectly well. It was the right thing to do, and to have that clarity, that confidence, rather than constantly fearing the market in the morning and dreading the next emotional decision you have to make, is like night and day. And these are things that anybody can learn.
It's got to be the biggest pat on the back, I mean, it's really got to be fulfilling. And you're right. You notice it, fearing the market. And that's what happens a lot of time. Traders have these accounts, and they end up, slowly getting chipped away, and they become scared to check it. It's almost like checking the mail when you're expecting a big bill to show up, and they start to fear the market, and they start trading like they fear the market. And then they start getting to the point where they start giving up on their own money. Well, I've only got $5,000 in it. I don't care. At that point, it's all over. It's done. You might as well just take the $5,000 out and give it to your favorite charity. At least that way it'll go to them instead of us. So,
this is right.
Exactly. So, what does your weekly schedule look like? Let's hone in on your classes here. What does your weekly schedule look like? If I'm a student of you, you've got some different levels here of teaching. What exactly is the setup and your average classroom scenario on a 5-day work week look like?
Yeah, absolutely. I mean, the way that we teach trading, we're a very practical school. You can go online or you can go to your local library and anyone can pick up, stock trading for dummies and stuff and read through the hundreds of pages of all the different indicators and all the different definitions, and if that's what you're looking for, go there and do that. That's not what we're about. We're not here to fill your head full of useless knowledge. We want to show you the skills of what you just practically need to know of how to make money. Stuff that you won't get in any kind of finance or accounting course. It's all general stuff. The idea of going through our course from the very beginning, where we teach the basics, right through to the end, where we get into some of the more exciting advanced stuff. It's all based on practicalities. So we start off teaching the foundations of the market, which is understanding, basically how the market is built, why these strategies work so well and how they work. We'll definitely cover, what are all the different patterns out there. We can say, look, so you know what they are, so you don't feel like you're, just wandering through blindly. So you'll be aware of them. But then what we're going to do is we're going to focus in, then in this kind of the second module of the course, of actually teaching you the specifics of how to trade a couple of these high probability setups. So we're going to go through, practice of identifying them, going through and using live examples of finding stocks that are currently in those patterns. We have homework tasks where we actually then send the students off to go do their scans with our program and find situations where certain things are occurring, and we'll then look at their homework and grade them and make sure that everybody's understanding. And then as we start to get into the kind of, as people are really starting to get the hang of picking these stocks, and ideally they should all look the same because you're looking for that same pattern again and again and again. Then we get into the psychology of trading. So, helping people set up and use their brokerage accounts effectively, making sure people's understanding how to set stop losses effectively. So, and there's some secrets to that which would shock you. For example, when you're setting up your brokerage, making sure that your stop loss doesn't trigger on the bid or the ask, but actually what the price of the stock is actually trading at. That's something that is very helpful. So we go through all those tricks, and it's not a seminar series. It's a very comprehensive skill-building curriculum, and it's being taught to you by an active trader, so someone who does this for a living himself, not just some kind of customer service person, or it's someone who actually trades for a living, who'll be teaching this and showing you his or her trades that they're actually doing as well. In terms of learning, in terms of time, we usually have one class a week, and we do that on different times throughout the week. The most popular one that's starting next is actually at 6 p.m. on Tuesday, Pacific time, and there's another class if you miss that one at 6 p.m. on Wednesday. We restrict the size of the groups to small groups. Usually 15, 20 people per group, and then you'll be getting support from your own personal mentor as well. So that each lesson is 90 minutes, and there's one a week. For the entire course is 12 weeks long. Now, in between that, there's going to be about 20 to 30 minutes a night of homework. So each night you'll sit down and you'll, let's say we're in week 4, your coach will have said, okay, each time you run the scan, look for this, this, and this, and mark down all the stocks where you feel would meet these rules. And so what you're going to do is you're going to run the scan. It takes seconds. It actually analyzes the entire market in seconds and will tell you exactly what stocks to consider looking at. You'll then go through those 5 or 10 stocks, and you'll draw the lines on the chart that you think you see based on what you've been taught to look for. And you'll then email back to us, this stock met the rules. And you'll do that each day, 20 minutes, and then we'll be reviewing those every class. One excellent feature that you'll also have throughout your training and going on from that is we hold what's called a trading room. And then every Tuesday, Thursday at 5 p.m., myself and the other head coaches all meet, and all of the students, past and present, come and join in. So it's an excellent community of traders who are all basically been taught the same strategy, all looking for the same goal, to make money, do this for an income and so forth. And we basically pool all of the research we've been doing, and we actually do a 25-minute review of the market, what's going on overseas, what's going on onshore, politically, economically, what's going on with Syria, all these different things, and how that could possibly affect the stock market. And then at the end of that, we then actually do analysis of the market and share with everybody what stocks we, as coaches, are potentially going to trade the next day. Again, these are not, these are not recommendations to say, this is the right investment for you to buy. But what we're going to do is we will share what stocks we personally are looking at, and where we're looking to get in and out, or what support and resistance we see, and as a starting point for your own research, and to be able to understand and learn from the thought process, start to finish, that we've gone through on each of those trades.
See, that's great. That's a collaborative environment. So many times, more than not, when you're looking for continued education in stocks, you're watching a video or you're reading a book. You're not dealing with a human collaboration type of situation where you can put in your 2 cents, get 2 cents back, ask questions, see what he's doing, why are you doing that? And that's really the missing aspect in so many of these courses. I know, because up until recently, I was trading myself up until about a year ago when I got into business, doing my IR stuff in the OTC, but look for continued education. And I might be the best at looking at the market my way, but your way can just open up so many more doors, and being able to kind of collaborate in that environment, and it could do the same for you, and it could do the same for you. I mean, all traders, good traders have their own strong points, and being able to encompass these different angles and, have that type of situation where it's almost like a classroom environment. Well, hey, did you see this? This might be a big factor. Oh, you know what? You're right. Let's put this one through the ringer and see what we think. Really, puts a different perspective on the market. Kind of like for a small portion of the day, you get to crawl out of this hole where it's just you and go into an environment where, everyone else is trading the market the same exact way and doing the same thing. Really adds a lot of structure to the daily trading. Now, anybody that's listening today, we want them to go to acornwealthcorp.com, and that's Acorn spelled ACORN, wealthcorp.com, all one word. And if you want, there's actually an offer there with a few free training classes, 4 free training classes actually, to get into Johnny's system at the Acorn Wealth Corp and become a part of the community. You can do 4 for free, which is an amazing offer. And you can actually go and get the exact details on this offer at acornwealthcorp.com/special offer. Once you get to that page there, you'll see that there's a large amount of information. You'll be able to get a little bit more in depth of what that offer actually encompasses. You read some testimonies there. You'll see some great short videos that'll give you an idea of what to expect. I have to tell you, one of the most amazing aspects of this is the fact that you get your own coach. You've got a Q&A coach to go to. You've got somebody that knows the markets. Just like, in the world, there's always somebody that's better than you at everything. If you're the biggest, toughest guy in the room, hey, you know what? One room over, there's a guy that could, take you out with one punch. Same thing in the market. These traders that have this 20, 30, 40, 50 years experience. I mean, I couldn't even imagine, just with the couple years experience I have, imagine someone's been trading the markets for 35 years, how much knowledge they can give you, giving you the key to the castle. Just go and accept it. So you have a phenomenal program. You have a great track record. We want our listeners today, again, to go to acornwealthcorp.com/special offer for the first 4 training packages. Johnny, it's been a pleasure having you.
It's a pleasure being here, and one thing people can you'll see when you go through these first 4 weeks, first 4 lessons, you'll have access to our trading rooms. You'll see what stocks we're trading. You'll see the access to the education on why we're trading that way, and it's because we're a big believer that the proof is in the pudding, and we want people to see how good it is to work with a mentor, and that's the difference between us and everyone else out there is that, we combine the book smarts with the street smarts. Knowing the theory and the tools is critical, but learning how to apply them at the very moment you choose to commit your money is even more important. Imagine a course that teaches you to do business in China. You can read books, you can take a course on speaking Mandarin, you can study street maps, but when you set out, why not have that mentor sit beside you on the plane, or have a guide to help you pick a hotel in a good district, or a companion to walk you through the streets of the city, pointing out where not to go and where you have to go. Most importantly, an interpreter to help you navigate your way through that first major deal. So, that's what you're going to get with us. And on that, I wanted to add something here. This is something that we actually haven't done ever before on one of these calls, and it's to really want to look after your network. And this is the first time, obviously, your listeners have been involved with us. So what we're going to do just for this call, for the first 30 people that actually sign up for that free introductory course, that complimentary course, we'll actually be offering them a personal one-on-one training session with myself or one of the other head coaches. And we charge, these are usually very expensive. Never done it in a complimentary course before, but these are extremely exciting markets. And for those first 30 people that sign up with the course, to give you your own one-on-one session where we'll have a look at stocks you've traded in the past, critique you on strategies, show you why things you've been doing have or haven't been working. I mean, it's an incredibly valuable session where you'll be able to walk away from that maybe answering a lot of the questions that are causing you frustrations or problems at the moment.
That's an amazing offer, Johnny. I really appreciate that. Now, how long would that mentoring class last? I mean, I want to call.
Well, make sure you fill out the form at the special offer page. Well, we'll go through that. In fact, what we'll actually, part of your session is once we receive the form, we'll actually have one of our course counselors call to set up the schedule for you. So they'll be able to find out, what areas you most want help with, what areas you're struggling or succeeding with, and we can then set you up with the best coach for the type of trading you're doing. Be completely tailored to your experience, and of course you can do that alongside attending those first 4 lessons of the standard course.
And for the traders that are listening today, if you want to go ahead and call Acorn Wealth, you can call 877-27-22-676. That's 877-27-22-676. That's the number on the top of your site there, Johnny. Is that going to be the best one for them to call?
Absolutely. Or they could also email info@acornwealthcorp.com, just letting us know kind of your name, number, and when you want us to reach out to you, and we can set that up also. But again, act fast, because there's quite a few people here on the line, and I know that their space will go very quickly. If they do fill up a course, we'll still be able to reach out to you and help you get set up with the course, and that'll actually be launching here in the next week or so. And that offer will, of course, come off for the one-on-one stuff relatively quickly. So do act fast, and if you are within that first 30 people, then we will reach out to you straight away and get you all set up.
And is there anything in particular that they have to do to identify themselves when they go to acornwealthcorp.com/special offer? Do they have to say that they heard the Stock Legends presentation, or should they call 877-27-22-676 number?
Yeah, the best thing to do actually is you'll have there'll be a box to enter a code. You want to enter the code MST Now. So it stands for Master Stock Trader Now, MST Now. Put that in the code box. And also, if you want to get ahead of the crew, you can actually, as I said, email info. Like information, info at acornwealthcorp.com, and write in the subject line Stock Legends, and again, just include your information there in the email body, and we'll be able to reach out to you and get you set up straight away.
It's really been our pleasure having you on the show today. So many people take a look at the market and they say, you know what, we're going into a bearish market, let me pull my money out, without realizing that 60 to 70% of the money is actually made in a bearish market. Having the opportunity to have you on the show and a trader of your caliber and your staff and your training academy is so well known. It's really great having you on, and I can't thank you enough for putting that offer on the table for my listeners today. That's what this show is all about, is trying to help people get that education. Big brother